What's up, Wealth Nation? My name is Carmen.
And I'm Darius.
And in today's video, we want to jump right into the content because we are excited to talk to you guys today. We always talk about owning your own lifestyle or someone else will. But what does that even mean in the first place?
We know it's a really cool tagline, but today we want to talk to you about the 4 phases of owning your own lifestyle as it relates to becoming your own source of financing.
When we tell you to own your own lifestyle, it's all about bringing intention and purpose to your daily grind. Because it can be financially related, it can be health related, it can be whatever it is that you want. But we just want you all to start zeroing in and being laser focused on the goals that you want to accomplish. Because what's the point of living if you can't live?
So with that said, let's go ahead and get into the first phase of owning your own lifestyle as it relates to becoming your own source of financing. And that is eliminating third-party debt. And using your whole life insurance policies to eliminate third-party debt, what you're doing not only is getting out of debt by redirecting those interest payments back to yourself, but you understand exactly how much things are costing you. So by understanding how much things are costing, you think differently when it comes to making a purchase because you understand the cost of every single thing that you're doing. That's the whole point of using your banking system to get yourself out of all third-party debt, which is first and foremost.
And you know what? I have to piggyback on what Darius just said because I don't think I've heard you put it that way before, and it gave me chills when you were talking about it, where you're talking about understanding the cost of the purchases that you're financing. I mean, that is so powerful, and it's just things that we don't even think about because we're just so used to mindless swiping and paying cash or whatever it is that we really don't take the time to do the numbers in our head and figure out exactly how much each transaction is costing us.
How much it is really costing us.
Yeah, exactly. And the potential cost of it if you pay for things in full using your banking system. So the one takeaway, if you didn't get anything from what Darius just said, make sure that you are eliminating that third-party debt so that you can understand the cost of the items that you're financing. And when we talk about third-party debt, we're talking about Amazon, we're talking about your Macy's card, we're talking about your Lowe's card, all of those things. We're not talking about the debt that you're leveraging to further yourself and your investments. We're talking about consumer debt.
So for example, you've seen our video on how much we actually spend in credit cards and how we use our banking system to recapture those payments back to ourselves. Now let's take a look at our Amazon card where we're paying 26% interest. What that means is we're paying an additional 26% for every single thing that we purchase using that card. Now that is a huge cost that we can be redirecting back to ourselves for future needs. So let's think about it. What can you use an additional 26% in income for in your life?
In income. Say that one more time, Darius, please.
What can you use an additional 26% in income in your life?
Darius is on a roll today because, again, these are things that we don't think about, and we want to make sure that you guys are getting this, that it's soaking in. Every single time you are mindlessly paying interest to the banks and financial institutions, that is more and more of your income that is being paid to them. And you're the one who's working every single day for that income, and you're just literally throwing it out the window. Which leads me to repeat our slogan one more time: own your own lifestyle or someone else will. Make sure that you are being intentional with all of the purchases that you're making.
Now let's get into phase number 2. After we've eliminated all of our third-party debt, now it's time to start investing. What investing allows us to do is to start putting our money to work for us. Because our third-party debt, we're using realized income or active income in order to make those purchases. Investing allows us to put our money to work for us. By putting our money to work for us, we're able to get our money back, principal and interest, which is the key to investing.
Investing is one of our favorite topics to talk about because it's all about working smarter, not harder, letting our money go out and come back with friends, just like the banks do. So when we talk about investing, it is very important that you are intentional and doing your due diligence to understand the investments that you're getting into. Because just because now you've eliminated your third-party debt, now you need to educate yourself on the investment vehicles where you can place your money. Because where we find that people get into trouble is because you trust someone else to own your own lifestyle for you. And you haven't done any of your education to understand exactly where your money is going, what are the repayment terms, and what are the exit strategies. So you need to make sure, again, that you are intentional with your investing vehicles and the education that goes with it.
So, just like Carmen said, education, phases 1 and 2 is still you understanding how money actually works. You understood how money works when it comes to debt. Now you're understanding how money works as it relates to your specific investing. Now, there are a variety of different investment vehicles you can use. What you have to do is really understand which one speaks to you the most and become an expert in that particular niche or field.
Amen. Don't just get into investing because your mama, your daddy, your best friend, or your sister is doing it. You need to get into an investment vehicle that you have interest in, because if you don't have interest in it, you're less likely to do the education and to track the progress of your investments.
Which means you won't be as successful as you think you should be. And then what we end up doing is blaming the investment vehicle when it had nothing to do with the vehicle. It was us all along.
It was you the whole time.
So own your own lifestyle or someone else will.
We going to church today. All right, ladies and gentlemen, now phase 3 is lending. Now we are leveling up one more notch to lending. And in this instance, we are going to mimic the banks and do exactly what the banks do. So now we have to educate ourselves on the lending front to make sure that we understand how to properly structure deals. So now you are going to be able to take over control of those deals because you are acting as the bank in these scenarios. So you have control over the deals, you have control over the structure, you have control of the cash flow, because he who has the gold makes the rules. This may sound a little far-fetched, but what I want you to do is just take a moment and start listening. You know business owners that are looking for lines of credit. You know business owners that are looking for money. You know business owners that are looking to invest.
And you know a ton of business owners who are currently paying third-party entities large amount of interest that you can come in and you're able to create a win-win situation for the both of you. Because in understanding investing or doing the investments that you were doing previously, you created a network of other business owners and investors who need money.
Simple as that. So don't overcomplicate it. All of this information, all of these resources are around us. Now all you have to do is be more strategic with the network that you're creating for yourself and understand their needs. And you may not be able to finance some of the deals right now immediately, but at least keep that in the back of your mind that you know you're building your banking system to be able to service these individuals when the time is appropriate.
Right, because if they're going to pay someone else interest, it might as well be you.
Yep.
And lastly, we have family legacy. After we've understood debt, investing, and lending, we want to teach our families exactly how to apply these same things on their own levels or as a family unit. Because when you think about our financial education and where we got it from, we didn't get it from school. We actually got it from in our homes through our families. So now it's our responsibility as a family unit to try to keep as much money in our family as we possibly can. And we do that through creating our own banking system, through debt, through investing, and lending as a unit.
This is where you take your family and supercharge your efforts. Because when you think about all of the individuals in your immediate family, many of those family members may have third-party debt, maybe investing, and maybe lending money in some way or another. But the fact of the matter is now you're creating a machine powered by your family to help stimulate more cash flow in your system so that you can take over more and more banking functions, not only in your lives, but in others as well.
Now, I admit this may be the hardest part of the 4 phases because it takes a ton of educating and teaching your family exactly how to move debt through the family instead of the banks. It takes a lot of effort to teach the family how to invest as a unit. It takes a lot of effort to teach your family how to lend. But when you come together on a weekly basis and understand exactly how money works, it gets easier and easier and easier until you get to the point to where you have created the legacy that you want for you and your family for the future.
And keep in mind, with the 4 phases that we just talked to you about, you may be doing a lot of them simultaneously. But the fact of the matter is we just want to make sure that you understand when we talk about own your own lifestyle. So absolutely tackle your consumer debt. Start educating yourself in the world of investing and the things that you want to get involved in, and start paying attention to the money and the motion of money that's happening around you, because that's just opportunities for you to get involved for your lending business. And then last but not least, it is going to be a process to educate your family. You're not saying this is going to be an easy route, but as long as you consistently start educating your family and everyone can get on the same page, we find that the walls tend to break down when you talk about the next generation, because everyone wants to protect their children and everyone wants to protect their grandchildren. So if you're able to lead with that information, you are able to build your own family empire on your own scale.
And if we can help in any way, click the link below to become a client so we can help you get your system started.
And comment below, let us know which one of the 4 phases that you're currently working on.
And if you like this video, make sure you give us a thumbs up, subscribe to our YouTube channel, and share it with a friend.
And say it with me now, own your own lifestyle.
Or someone else will.